Right, Indranil is back with us. Indranil, I was asking you, you recently come out with the outlook on the Indian economy. What high frequency indicators are you reading which suggests, and what kind of shape do you see the economy in, say, 6 to 12 months far out?
We are looking at a contraction of 4% of GDP this year. If the lockdown ends by middle of September and restart takes till October, if that does not pan out, the world has to wait for a vaccine, then we are looking at about 7.5% growth contraction. Next year, obviously, assuming that, we normalize, we are looking at 9% growth, largely driven by the base effects of this year.
Right. What are the challenges to the hypothesis? Perhaps a second wave, or do you think, this initial burst of activity which we are seeing once again coming out may get challenged again? What are the risks to your hypothesis?
Yeah, so the risk to the hypothesis is the second wave, which is why we think that, if that happens, then the economy, will contract 7.5%. So right now, we are obviously in a situation where, it's really left to a medical issue, whether the infection spreads, whether, you get a vaccine in time.
Right. Mr. Sen Gupta, lastly, what kind of further government action are you building in your hypothesis from here on, more over and above what has been announced so far?
So let me divide this into two parts, what the RBI will do and we think, and what the government will do. So looking at the RBI, in our base case, we are looking at 75 basis points of rate cuts by October. We think that the RBI will have to about $102 billion to fund the fiscal deficit. The consolidated fiscal deficit will be probably around 10.6% of GDP. And thirdly, to incentivize banks to buy G-Secs, we think that the RBI will extend the HTM facility. In addition to all this, we think that the RBI will keep on buying FX as and when they get a chance. Turning to the government, we are looking at more demand-side measures. There could be interest rate subsidy for, SMEs and real estate. We could see a cut in oil taxes to boost consumption. We think that, the government sooner or later will pre-commit to recapitalize PSU banks. We think that they could either issue recap bonds or they could use the RBI's revaluation reserves, which are almost $130 billion. And finally, there could be, a PSU bond issue, let's say raise about 1 lakh crore to fund investment. So we essentially think that the focus of policymakers from here on will be on the demand side to, support recovery.
Right. All right, Mr. Sen Gupta, we'll let you go on that one. Thanks so much for your time. That was